Hi everyone, thank you for being here. Big news this week with gold breaking another all-time high at over $2,600 an ounce. But the question you should be asking yourself if you're not already is, what does everyone who's buying gold know about what's coming next that you don't? Well, gold is trying to tell us something. It's trying to tell us that we are not only in a crisis, but that things are about to get a whole lot worse. And today I will break down 4 of the key components that are contributing to this so that you can protect yourself. Now, first things first, let's talk about the global stage. Geopolitical tensions. Now, you've heard this before, but this week in particular, there has been a ton in the news about growing fears in the Middle East. Some of these headlines: fears of wider Middle East war intensify, violence rises, Middle East crisis explodes. It's no secret that things are looking worse by the minute. Now, should this war escalate, which it probably will, we can expect a couple of things to happen when we talk about the economy. Now, we're going to see more instability. We're going to probably see oil prices rise, and we're going to see more market volatility. Now, all of this essentially boils down to heightened risk. And anytime there's heightened risk, we see people flocking to safe haven assets. Now, the ultimate safe haven asset is gold, physical, tangible gold. Why? Because history tells us it is. Time and time and time again, going back thousands of years, anytime there's heightened risk, anytime there's geopolitical uncertainty or tensions the way that we are seeing today, gold maintains its value. It is a safe store of value. And people know this, and that is why it's not only people, but central banks that are also rushing into gold, which brings us to the second thing that's going on, the central banks buying gold. Now, we know that the BRICS bloc coalition is making huge moves. Next month is their summit that's going to be held in Russia. We're going to see that in October. And we know that they have a list a mile long of applicants, people trying to join the BRICS bloc coalition. And the reason why this is concerning for the United States, of course, is because they are laser focused on de-dollarization, essentially dethroning the dollar. Now, who is involved in BRICS? China, right? China, the central bank, China's central bank has been buying gold in record quantities over the last few years. They've been buying as much gold as they possibly can get their hands on. Now, why would they do this? There's a couple of theories. One could be that BRICS is going to be launching a BRICS currency that will be gold-backed, a gold-backed currency, giving it weight and credibility, right? Something of value. Now, the second reason could be that they know that their goal of de-dollarization is gaining momentum, and they want to diversify and make sure that they don't have their wealth tied up in the dollar, which is essentially going to be worth less in the future. Instead, they want to make sure that their wealth is in something that will hold its value over time. Again, like gold. It's important to remember here that gold does not speak a certain language. Gold does not have enemies or allies or belong to a political party. Gold transcends everything else that we see that is wrong with, say, the US dollar, which brings me to the third point, the third key component that's going on right now, which is the Fed's rate cut last week. Now, everyone expected there was going to be a rate cut, and if you watch some of my other videos, you'll hear me say that I don't think a 50 basis point rate cut is going to save the economy. I think that what we are up against is so much bigger, a mountain of debt, which I will also talk about in a second. But the Fed's 50 basis point rate cut did tell us a couple of things. Now, the Fed has been claiming soft landing. But a 50 basis point rate cut to start a rate cycle has not been seen outside of 2020 since 2007. Before that, it was 2001. Essentially, we know that them doing a 50 basis point rate cut was them telling us that things are far worse than they want us to believe, which tells us one of two things is true. Either the Fed has no idea what they're doing, which could be true, but they have no idea what they're doing, and they really truly believe that there's going to be a soft landing and they're just messing it up with their actions, or more likely they understand that what they're feeding us all, the soft landing narrative, is a lie, that it's not true. And instead they are panicking and they are doing what they can to try and course correct. But it's like oversteering. Have you ever had something where it's a sensitive touch and you go too far to the right and then you have to overcorrect to go to the left? That is exactly what the Federal Reserve is doing right now. But course correcting aside, when rates are cut, the dollar becomes weaker. Now let's really take that in, because I understand it almost feels counterintuitive. We're used to when rates are cut, there's more dollars, there's more activity happening, it's stimulating the economy. But what's actually happening is that the dollar becomes weaker. Why? Well, for a couple of reasons. The first one being that yield returns are less. So yields on US bonds for investors become less. That means that there's less appetite for the US dollar. And if there's less appetite or demand for the dollar, then the dollar is going to be weaker. Now, a weaker dollar becomes what? It becomes a better choice for buyers for gold, especially if the trajectory is going to continue the way it's going, which we know more rate cuts are coming this year, more rate cuts going into next year. So as these cuts continue, we are going to see the dollar further decline and gold strengthen. And this brings us to the fourth item on the list, which is inflation. Now, I don't have to explain inflation to you, but when we're talking about rate cuts, what happens here? Essentially, when we stimulate the economy, we are saying, let's have more funds available for borrowing. So more credit is available, more loans are available, there's more money or currency circulating in the economy. Now, how is more currency created? And I'm not talking about the Federal Reserve's printing press. I'm saying basic economics 101. When banks create loans, they are actually creating more cash flow into the economy. So if we have more loans, there's going to be more currency in circulation. When there's more currency, each and every single individual unit of said currency becomes worth less. So the dollar in your wallet is going to be worth less. Inflation, unfortunately, is not under control, and it is not going away. Now, you might not be one of them, but too many people out there are taking all of this in and are still stuck on saying, well, why would I want to buy gold when it's at an all-time high? Shouldn't I wait for prices to come down? Don't smart investors buy at the dip? Sure, but you have to remember, why are you purchasing gold in the first place? Are you buying it to get rich fast? Are you buying it for a quick turnaround? No, that's not what we're doing here. The reason why people are buying gold is to protect themselves. The reason why central banks are buying gold is to protect themselves, to make sure that their wealth is protected, an insurance policy against everything else that's going on. Because if we look at what's happening when we talk about those key components I just outlined, rates, we know that more rate cuts are coming. Inflation, we know that inflation is going to grow. BRICS, we know that BRICS bloc is only going to gain strength. Geopolitical tensions. We know that those tensions are escalating. When we look at all of these components and we look at the trajectory of where they're going, things are going to get worse, which means that the dollar will be worth less and gold will be worth more. So to be honest, there are people who I know 6 months ago, a year ago, are kicking themselves saying, I wish I had protected my wealth sooner. And that's what I don't want for anyone out there who's watching, is to be thinking, well, maybe I should wait, maybe now's not the right time. But then in 6 months or a year from now, things have only gotten worse and you're thinking, oh my gosh, I wish I had done that back when I had the chance to do it, back when my dollar was worth more than it is today. And I see your comments, people out there going, okay, well, I'm concerned about all of this, but what do I actually need to do next? Well, there's a reason that I say talk to one of our expert analysts, and it's because it's not a one-size-fits-all. Your needs are going to be different than my needs, are going to be different than my neighbor's needs, because ultimately we all have different financial circumstances. We all have different goals. We all have different concerns, and it really comes down to each unique individual. So what's really crucial here is that you talk to someone who not only understands gold and silver, but also understands everything that's going on in a big macroeconomic picture. so that you can make sure that whatever plan you have in place is custom to you and will work best for you and your needs and your goals. And that's my wish for everyone, is that everyone out there watching is protected, because again, the news, unfortunately, what's going on is only going to get worse. So if you haven't already, talk to someone from our team. If you already think you have a plan in place, but you want a second opinion, talk to someone from our team. We have a phone number below. We have a Calendly link below where you can click and call. And if you have any other questions or thoughts, leave them in the comments below. I love to read everything you're saying. Tell me what you think. And as always, I so appreciate you being here. I'm Taylor Kenney with ITM Trading, your trusted source for all things gold, silver, and lifelong wealth protection. Until next time.